What's being cheered here? You know, sometimes cutting your way to profit and cutting your way into a good financial position is not the most exciting story. What is the Laura Martin main takeaway?
Well, the Laura Martin main takeaway was I thought they left more questions unanswered than they answered. So I think one of the big questions is they just did an affiliated transaction with Oracle, which for enterprise software, which is the dad's company. So now you can, through pricing, move money between these two public companies. That sort of was weird. And then also they said they're going to spend $1.5 billion on content and double their film slate from 7 films a year to 15 films a year starting in 2026. And the problem with that is the Skydance track record is 1 theatrical release a year. So going to 15 means not only are you spending the money on the negative cost, but now you're going to spend about $100 million each marketing, which all just sounds like an awful lot of money that you're spending in the near term, which is a tax on public shareholders before you get the return. It takes about 3 years to release a movie between greenlighting and a release, which means you have a couple investment years ahead of you. Which doesn't sound like, so we're going to stay on the sidelines here in terms of the shares.
I want to go back to that relationship between Oracle and the affiliated transaction that you mentioned, implying that the value can be transferred between the two public companies. How much is that a help if you're thinking about the sheer scale of money David Ellison needs, perhaps from Larry Ellison, to keep on buying in WBD assets? Or how much is it a concern just in what are you actually buying, an entertainment company here or a tech and AI infrastructure bet?
So I think that is one of the differentiated things they're saying that our content storytelling is complementary to our tech stack, and our tech stack needs investment because Paramount, the old Paramount, sort of starved it. So we P-Sky are going to invest in the tech stack. So from a fundamental point of view, they're going to try to marry storytelling with Gen AI tech, which is sort of a cool messaging, although expensive in the near term. I would say the Oracle point was just a new piece of information we got, having nothing to do with Warner Brothers. Like if the dad writes a $70 billion check to Warner Brothers, that's a bigger deal than a contract might be several million a year. So if it's just an affiliated transaction that I just would really like to see the pricing on when they have to disclose it in a 10K. But it's just a new piece of information. I think the big issue is you don't know what you're buying here. Are you buying a $16 billion subscale Paramount Skydance, or are you buying are they going to use money to make a $70 billion acquisition of all of Warner Brothers? And then that's round numbers, $100 billion scaled player with bigger everything, including studios. So then you wouldn't have to double the films because Warner Brothers got 15 by itself already. So I think they might be justifying of Warner Brothers bid in some ways with some of their cost estimates here.
Laura, very quick pivot here. You just heard the CoreWeave interview. You published your research on hyperscaler CapEx. Just a quick reaction to what you heard?
Yeah. So, I think one of the biggest question we get is, are the hyperscalers spending too much money on infrastructure? And we published a note this morning showing that the Gen AI implementations at Amazon, Meta, and Alphabet are accelerating their revenue growth and cutting their operating costs. So they're getting margin expansion by using generative AI tools, which gives them the confidence to invest in these infrastructure plays to then sell to third parties those same capabilities to lower costs and drive, faster product innovation for the rest of the U.S. economy. So I actually think that the biggest funders of generative AI infrastructure are seeing the biggest benefits already in their own businesses.